To the banks now, and hot on the heels of National Australia Bank's solid result comes a near $7 billion bottom line from Westpac. The bumper profits made it more difficult for the banks to pass on anything less than a full interest rate cut to their home borrowers, but NAB took that risk and attracted the expected attacks. Here's Philip Lasker.
NAB has cashed in on its image of being different, and true to form, it stood out from the pack again by passing on only 20 of the 25 basis point cut announced by the Reserve Bank yesterday.
The uncertainty in Europe, the volatility going on in overseas markets, and that is leading to a rising cost of funds. What's important, though, is we've been able to maintain the lowest standard variable rate of the major banks.
It didn't go down well with a treasurer who earlier this week told banks to pass on the full cut.
It's a kick in the guts to working families. It's a greedy decision from the NAB, and it is not justified, in my view, by the fundamentals.
The funding cost pressure argument didn't wash with one of NAB's rivals either.
I think that's a forward-looking view. As I said, as I see it at the moment, there's no reason not to pass it on. I think this is important for the Australian economy and good for customers at this point.
The Westpac chief denied her bank's decision to pass on the full cut had anything to do with the timing of today's thumping big annual profit announcement, close to $7 billion. But second half profit was down 13%. Analysts say core businesses like the Westpac retail and business banks and St George are doing quite well.
They've got a fairly strong volume growth and also margins actually expanded over the year. So when you have that going through, it's going to underpin revenue growth.
The issues are costs and productivity, particularly in a weaker growth environment. But Gail Kelly was careful not to confirm that Westpac would be outsourcing more functions at the expense of in-house operations.
But it is a new model of operating, as I mentioned this morning, moving from a model where suppliers and others have provided staff and resource to us to assist us with our work, to a position where we actually are working with suppliers to manage whole functions or processes for us.
You've got a lot of branches, but the revenue potential isn't there. So I think you could tighten up the network a bit. And the other thing is cross-sell. People talk about wealth, the wealth space, and I think there's still going to be a lot of rationalisation in that area.
Like many companies, Westpac is cautious about the future given the turmoil offshore.
We've seen that during the course of this year. The actual underlying strength of the economy in Australia should be such that we should be performing better. However, we have been impacted by the concerns, the volatility, the challenges in Europe and in the US.
And like her rivals, Gail Kelly was warning about higher funding costs, in effect putting borrowers on notice not to expect to get the full amount of future cuts in interest rates.